if you look at Bitcoin today, it's a $2 trillion asset in a $1 quadrillion market. If you do the total global asset value, it's about $1 quadrillion. This is a number according to Jesse Myers at Croesus on X, or at Croesus underscore BTC on X. Most people probably already follow him. You could also see him at onceinthespecies.com. Purely a plug for the source of this data that I'm using now, by the way. Not paid or affiliated with him, just a good buddy of mine. And he provides this data. So Bitcoin's a $2 trillion asset, 2.4 roughly, looking behind me, in a world that's $1 quadrillion in size. So Bitcoin currently represents 0.2% of total global asset value. In addition to that, you have two factors to consider. One being the global equity market is $135 trillion, right? So Bitcoin is still just a little bit over 1% of that. And then bonds are a $318 trillion market. And so less than Bitcoin is less than 1% of that. And so when you consider the rate at which you'll be able to borrow against Bitcoin at some point in the future, and look at today where we are, the two things to consider are the size of Bitcoin relative to things like the bond market, right? So its liquidity, and its cross-asset correlations. What does the market treat it like? So we'll start with the latter. Bitcoin's cross-asset correlations treat it like a tech stock. Bitcoin is traded like the NASDAQ. It's no secret. Which is kind of insane because Bitcoin's white paper, right? All of its attributes are totally antithetical to a tech stock. A tech stock is infinitely issuable. Obviously, if the board of directors approves of it and public shareholders approve of it, theoretically, a tech stock or any other common stock is infinitely issuable, right? So automatically, that doesn't make it, Bitcoin does not fall in that category whatsoever, right? Absolutely scarce, verifiably scarce now until infinity, until the world ends, right? You pair that with Bitcoin's trading profile, right? Tech stocks close over the weekend, right? It's 9 a.m. to 4:30 or 9:30 to 4, right? Whatever, depending on what exchange you're on. And it's only Monday through Friday, excluding holidays. That's, again, antithetical to Bitcoin's properties. Bitcoin is a 24/7, 365 asset. And once again, you compare that to tech stocks. Bitcoin is currently the 5th largest asset in the world. It might be behind Amazon again to number 6, but either way, we'll say number 5, because this cycle it will surpass Amazon fully and never again fall underneath it. So Bitcoin is currently, it's only behind NVIDIA, Microsoft, and Apple in that order, right? So of the big, massive, largest stocks in the world, those being tech stocks, Bitcoin is ranked number 4, right? Bitcoin is growing in size to a point where its monetary properties will finally be allowed to show through and reflected in its market price because of its extremely small size and the people who are trading it. But it's primarily a size thing. Bitcoin has just been grouped in with assets that it has nothing to do with. I believe that over time, because this has been the case, Bitcoin's cross-asset correlations to the stock market, particularly the NASDAQ and the Russell and then the S&P, moving in descending beta, Bitcoin will lose its correlation to those. Its positive correlation to those will gradually wane. And Bitcoin will become the least correlated asset in the history of asset markets. So that's factor number 1. Factor number 2, again, is size. Cross-asset correlation has been our great deal, but what about size? If we're talking about being able to borrow in a market that's highly liquid, I talked about the risk-free rate, the U.S. Treasury market. It's currently, I believe, like $30 trillion or $35 trillion. I could be way off on that. But as far as I know, around $30 or so trillion, largest single asset market in the world. So if we want to gauge a sense of like, okay, when will Bitcoin be, I'll be able to borrow against my Bitcoin at a relatively low rate. Like, take a look at the size of gold for one at $22 trillion. Then take a look at the size of the U.S. Treasury market at about $30 or $35 trillion. As Bitcoin approaches and crosses those two things, or more broadly, as Bitcoin just grows in size to a 5, then 10, then 20, then $50 trillion asset, you'll naturally be able to borrow at a much lower rate because Bitcoin is pristine collateral, right? You can put this thing into a 203 multisig and then liquidate it at any time. It is 24/7, 365, which means that it's callable at any moment, right? You can ask people to post collateral 24/7, 365 if the price falls below or dangerously close to the liquidation level. And then if it falls below, you can instantly liquidate, right? So as a lender, you want to use Bitcoin as collateral because it is so fantastic. But the one thing you have to hedge against is the tremendous price volatility. You're basically asking for this huge markup, this 12, 13, 14%. I believe that as Bitcoin grows to the size of gold, to the size of US treasuries and beyond, rates will eventually become comparable to those two markets as its price volatility drops and drops and drops. And that risk premium, which causes Bitcoin backed loans to be such a high rate, will adjust downward as a result.
It's super interesting when we look at individual stocks, and I'm 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 still stunned that we are smaller than some companies. I personally think it's outrageous, and it shows the huge opportunity that lies in exactly that, where I think we will be 10x bigger than the 10 biggest companies combined. And the 10 biggest companies combined are right now roughly 20 trillion dollars, something like that. And it's also funny enough, roughly the market cap of gold. And I've personally really believe that we will be 10x bigger than gold. So to see Bitcoin being smaller than companies, even if it's Apple, even if it's big companies, that's ridiculously early that we're in.
Yeah, no, to me, it's completely ridiculous. Like Bitcoin being only $2 trillion today is totally ridiculous. Like we talk about having, you and I are communicating across continents, across thousands of miles of open ocean, and we're doing it on a supercomputer where we have access to AI assistants and large language models that can aggregate basically all of the world's information for us and answer any question we ask with like a 90% confidence interval. Um, and so that all that is to say, we are very high information people, right? Relatively speaking. Um, and the fact that Bitcoin is not priced correctly in this extremely high information world is mind boggling. But for you and for me and for everyone listening, that's the opportunity. Bitcoin is a $100 trillion idea that is currently valued at $2.4 trillion, right? Therein lies the opportunity, right? If you believe, that what I said is true, Bitcoin is a $100 trillion idea, 200 trillion, $500 trillion idea, then Bitcoin is severely underpriced. And that's your edge, right? In a high information world where the world is yet to catch on that Bitcoin is an absolutely scarce monetary property that cannot be changed, that should be the least correlated asset in the world, the apex risk off property that you want to own in good times and especially in bad, the world hasn't come around to that yet. But you know that, then Bitcoin is severely underpriced, right? By a factor of 100. And so, frankly, that's your edge.
George Bodine was on my podcast a few weeks ago, and he said something interesting. He said Bitcoin went from being a small boat or jet ski, something like that, he said, to being an aircraft carrier. So it went to be way bigger, and that's why it moves differently. I think it also ties into what we were saying in the earlier part of the conversation of it just moves around like a jet ski. A small wave came, and all of a sudden the jet ski was on its head. And now if a small wave comes, the aircraft carrier is just like laying flat there, and people say like, oh, Bitcoin is boring now. I thought about that recently, and I haven't shared it, but I think the comparison is probably more accurate if we say Bitcoin is kind of the ocean. It's kind of the foundation of everything, and then in the ocean there are the aircraft carriers, and the aircraft carriers is like Apple, and then there's a small startup that's the jet ski and all those things. But Bitcoin is kind of like the aggregate of everything. Not right now, like obviously not right now. Right now we're like still a small asset, like still a small fish in the ocean, but eventually Bitcoin is the foundation. I said that multiple times on the podcast. I think this podcast will be super boring in 10, 20 years because Bitcoin is just the ocean. And
it would be like having a podcast about the US dollar. Yeah,
exactly. I mean, could be interesting, but I won't be interested in it.
Absolutely. I mean, the aircraft carrier analogy, I think, is really helpful because it allows you to get a sense of where Bitcoin is at relative to other assets. If you want to adjust for the total global asset value, what you could even say is that Bitcoin used to be like a small toy sailboat, right? In 2021, it was a small toy sailboat, and now it is, a normal sailboat, right? A normal size sailboat, big enough for one or two people. It still gets bumped around when there are these massive waves. However, it can hold its own on the open ocean much better. It is much more anti-fragile. It's much more resilient during bumpy waves. The aircraft carriers of the world, I would say right now, are the equity market, right? $135 trillion. The bond market, $318 trillion. The market for just money sitting in cash and, sovereign bonds, $129 trillion. And real estate, $370 trillion, right? Those are the aircraft carriers of the world. And Bitcoin being only 0.2% of the global asset value, to me, it's still a little sailboat. And so, but ultimately, the realization is that, another way to describe what I just said, Bitcoin is a $100 trillion idea, currently valued at $2 trillion. Um, is that Bitcoin is going from a sailboat to an aircraft carrier, right? Ultimately, Bitcoin is meant to be an aircraft carrier, the biggest aircraft carrier of all, but it's still only a sailboat. And so that's your edge. Another way to visualize it is that, Bitcoin is a black hole. This is a very popular one. Bitcoin is a black hole that's sucking away all of the value from these other markets. But I'll adjust that slightly. Bitcoin is a black hole that's siphoning the monetary premium from these other asset classes into itself. What I mean to say is this: Bitcoin was created, and it is the perfect store of value, right? That is its function. That is its chief function. It is also peer-to-peer electronic cash, right? It says it right on the byline of the white paper behind me. But ultimately, it is the perfect store of value. The reason so much capital has flowed into real estate, into bonds, into equities, into art, cars, and collectibles, which is a $27 trillion market for some reason, is because post 1971, all of that monetary capital needed to find a new home, right? Monetary capital that was parked in the dollars, in US dollars, because it was backed by gold, which is a scarce store of value, needed to find a new home once the US dollar departed the gold standard. It was no longer pegged to gold. So that monetary capital took flight. And what has happened since 1971, right? We've had tremendous asset price inflation as a result of monetary debasement, sure, but also people buying things and looking for a home for their money that will just outpace this monetary inflation. It's primarily monetary inflation, but it's also people buying things that aren't stores of value to store their value, right? Namely art, cars, and collectibles. Like, why on earth is that a $27 trillion market? But also real estate. I've run the numbers, and on the low end, real estate, about 33%, 36% of real estate is pure monetary speculative premium. It's not the bricks and mortar or the wood or the roof or whatever or the land. It's just monetary premium. It's an excess over the value of the stuff itself, because people have fled from other assets and they've purchased real estate to try to hedge themselves. And at the same time, monetary debasement has risen the value of everything. And then on the high end, you're looking at numbers of like 50 or 60 or 70% of global real estate at $370 trillion is just monetary premium. It's value that shouldn't be there. It's the difference between the market value and the intrinsic replacement cost of any given property, whether it's, residential, commercial, agricultural, or anything else. So, like, basically every single one of these markets I just named has a massive monetary premium that's due solely to monetary debasement, but also people parking their capital in imperfect stores of value. Bitcoin being not only absolutely scarce, so it's a hedge against monetary debasement, but also the perfect store of value. It is the black hole that is gradually siphoning away capital from all of these markets. That's not to say that all of these markets won't continue growing. Of course, all of these markets will continue growing on a relative basis to where they used to be because of monetary debasement, right? Saylor thinks that in 21 years, the total global asset value will go from $1 quadrillion to $4 quadrillion. So in that world, every asset market is bigger, but the difference is that Bitcoin takes up a much larger slice of the pie, right? Closing in on 10%, I think, is Saylor's estimate in 21 years. And so that would mean Bitcoin is a $40 trillion market, I believe, something like that. Or closing in on 1%. A $40 trillion market on the low end, right, is one of Saylor's estimates. And so, that would mean a price, if we're talking about $120,000 per Bitcoin today, if we multiply that by 2, that's $240,000 per Bitcoin. If we take that out, multiply it by 10, that's $2.4 million per Bitcoin. Should this occur, right? Should Bitcoin move from just 0.2% to 1% of the total global asset value 21 years from now, if the total global asset value is $4 quadrillion. And so really it's a simple assumption. And that's not even assuming Bitcoin will overtake any of these markets. It's simply saying that Bitcoin will grow in size relative to them. And so, if Bitcoin is a $2.4 million asset in a 4.8 or $2.2 million asset in a $4.2 trillion market, um, or a $40 trillion market rather, um, but ultimately that represents 1%, then you can imagine how much higher Bitcoin is going as it sucks the monetary premium out of these other assets. Um, so all that very long-winded way of expanding on your analogy, but I just think it's so helpful to say these things because people say, "Oh, Bitcoin's $120,000." They get unit bias. They go, "How much higher can this thing go?" When in reality, it represents the perfect store of value. It solves the chief problem that asset markets have been trying to solve for the last 54 years, right? That's the value of Bitcoin. And so if you can understand that and you can understand where it's headed because of that, or you can make convictions about where it's headed because of that, then that is your edge.
I couldn't agree more. I love that. And there's so many interesting things in there. First of all, I want to touch a little bit on real estate because I think it's an easy dream to sell people of like, oh,
Yeah.
like own your real estate, build your family, the American dream, and all those things. But there's like inherent cost to it, and I'm not saying real estate is like a bad asset to own. It can be really good. Like having a dedicated place for your family is amazing. If you see it as a business, can also be profitable, but it's not Bitcoin. It's not savings. And I think a lot of people, as you pointed out, kind of misuses it. And when I ask exchanges and other people that have a lot of insights of like where is the money coming from, because like people buy Bitcoin, the money comes from somewhere. So either people sell other assets, they buy it with their checks, they are using it as a savings technology, all those things. I think real estate is actually a big bucket of where monetary energy comes to Bitcoin. And there have been at least, I would say, 15 to 20 guests on my podcast already that shared the story how they sold their real estate to buy more Bitcoin. like literally they had all in real estate and now they are all in Bitcoin. So I don't know. What's your take on like real estate and the monetary premium of that flowing slowly in Bitcoin?
Of course, I believe real estate is the single largest market whose value will be siphoned into Bitcoin. And I'll explain the reason why, right? So, global real estate is a $370 trillion market, as I mentioned. Um, what we want to do is calculate the monetary premium, right? That will be the first and easiest estimate of how much capital Bitcoin will siphon from real estate over the next several decades. Obviously, it will increase. These are based on today's numbers. Just 2 or 3 years ago, real estate was a $320 trillion market. Now it's $50 trillion larger. Not because $50 trillion of more value has been created in real estate. It's because it's inflated primarily, right? Monetary debasement. So over time, Bitcoin will take up a larger and larger and larger share of real estate because it is the single largest asset market with the biggest monetary premium. Right, it is the asset market that has the single or biggest monetary premium inside of it. And there are a couple of ways to calculate this. Right, so my mental model for monetary premium boils down to this. Right, it is the market value minus the intrinsic replacement cost. Right, that is your monetary premium. So whatever the market is valuing this thing at minus the cost to take the exact same building on the exact same piece of land and rebuild it again, right? That's it, right? Factoring in labor and materials, right? And if you do that in the United States, then you calculate a monetary premium of roughly 35.7%. Um, so essentially, if you extrapolate that out to the entire world, obviously that is a very bare bones calculation. Other factors need to be considered. This is solely for the United States. But for the purposes of this discussion, let's just say that 35%, 35.7% of a monetary premium that's in the United States in the real estate market extrapolates out to the entire $370 trillion global real estate market. In that case, the total amount of value in the real estate market that is not in bricks and mortar, is not in land, is not in actual property, um, is solely in this speculative premium is $132 trillion. There is another method to calculate this, right? So that's kind of on the low end, right? If we take a look at the CPI based premium, right? So we can calculate monetary premium another way. And that's essentially taking a US home adjusted for CPI from 1975 to 2025 and then subtracting it from the average actual 2025 US home price. So if you take a home from 1975 and adjust it for CPI to 2025, it would cost $227,520. Obviously, homes were also smaller, right? The average home size right now is 2,000 square feet. It was much smaller. And so more things need to be factored in here. But in reality, if we take this value, and we subtract it from the average U.S. home price today, we find that there's a 54.8% premium in U.S. homes. Again, if we extrapolate that out to global real estate, that's $203 trillion dollars. Excuse me. And so that's 55% of the market, basically. So if you take a number just somewhere in between those two things, right? Between 203 and 132, let's just say 170, right? We take $170 trillion. We say that is the amount of monetary premium in the global real estate market. And you begin to understand, wait a second, real estate is a $200 trillion global market that's currently valued at $370 trillion, right? If there's anything that Bitcoin's great at doing, it's making it show. It's showing that other things that are treated as stores of value are not stores of value. It's done that most recently with crypto, right? This other non-Bitcoin garbage that tried to sell itself as the next Bitcoin or a better Bitcoin for such and such reason. In prior cycles, altcoins rose faster than Bitcoin during bull markets. This is the first market where, on a secular basis, that has not been the case, right? This last week, some altcoins have hit an uptick purely because of news and other things that are completely unrelated to the reason people buy these things. It's pure hype and it will die down. But in reality, Bitcoin has basically shown to the market that the value proposition of this stuff is not a store of value. It is demonstrated that these other assets are imperfect stores of value. And so Bitcoin, being a $2 trillion market, as it grows, the next leg up is surpassing all of the remaining stocks that it's not bigger than yet, right? It will demonstrate by doing that those are imperfect stores of value. And then gold is on the chopping block at $22 trillion. It will pass gold, thereby demonstrating that gold is an imperfect store of value. But all along the way, it's siphoning capital from these other areas where they're proving to be an imperfect store of value, or at least a less competitive store of value to Bitcoin on a relative basis. Bitcoin treasury companies exist to allow capital that's invested in the equity market to be siphoned into Bitcoin, right? And Strategy's preferred stock, Strife, essentially is siphoning capital from the bond market, the $318 trillion global bond market, by offering this preferred stock instrument to primarily fixed income investors who didn't have exposure to Bitcoin whatsoever, thereby siphoning some of the capital from the $318 trillion bond market into BTC. Real estate, in my mind, because the other two are investment markets, people are purchasing those in order to get a rate of return on their capital that's greater than monetary inflation. They are investment markets, right? They are stores of value to a lot of people. Real estate shouldn't be, right? Real estate is a home. It's a place to live in, largely, or it's land to farm on, or it's a building for your company to lease, right? Those are the things that real estate is. It is not an investment, largely. Obviously, there needs to be a profit motive in order to drive building developers to create these buildings and then get cash flow from these buildings, and for a city to receive tax revenue from these buildings. But that said, it's blown way out of proportion, right? You now have Blackstone buying up single family homes in the United States, not because they intend to develop them and turn them into, create massive communities of homes and create new homeowners. They're buying them and just sitting on them.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.